Every single year, thousands of business owners hand the IRS a golden invitation to tear apart their finances, and most of them don't even realize they've done it. We're talking audits, penalties, back taxes, and the kind of stress that makes you question every receipt you've ever touched. The biggest mistake isn't what you think. It's not hiding income or being reckless. It's the slow, quiet erosion of boundaries between your personal life and your business. When you blur that line, you don't just create an accounting headache. You essentially wave a red flag in front of an agency that has nothing but time and algorithms on its side. Picture this. You grab lunch, call it a business meal, throw it on the company card, and move on, harmless, right? Multiply that by 365 days, add a family vacation that was partially for work, a home office that's really just your couch, and suddenly your expense report reads less like a business and more like a lifestyle funded by your LLC. The IRS has seen every version of this story, and they have machine learning models now, yes, actual artificial intelligence comparing your deductions against thousands of businesses in your industry. If your numbers look like an outlier, you don't get a phone call, you get a letter, and that letter is not friendly. Here's the irony that should keep you up at night. The deductions that feel the most justified are often the most dangerous. Home office, vehicle use, meals and entertainment, these are the holy trinity of audit triggers, not because they're illegal, but because they're almost universally abused. Back in 1997, the IRS actually simplified home office rules because the old ones were so confusing that compliance was nearly impossible. But simplification didn't stop the abuse. It just made people more confident about claiming a dedicated workspace that doubles as a guest bedroom 3 weeks a year. Here's what the tax code is actually doing beneath the surface. It's not designed to punish you. It's designed to reward documented, intentional, business purpose-driven behavior. The moment your deductions become reflexive habits instead of deliberate decisions, you stopped playing the game and started gambling with it. Experts like tax attorney Barbara Weltman have been saying for years that the number one thing that separates a clean return from a disaster is contemporaneous documentation, meaning you write it down when it happens, not when your accountant calls in April. Most business owners treat their records like a journal they'll catch up on someday, and someday never comes. The practical fix is almost embarrassingly simple. Keep a mileage log, save your receipts with a one-line note about the business purpose, and never ever run personal expenses through a business account even once. One personal charge in a business account tells the IRS that your accounts are not clean, and now everything is on the table. The other massive mistake that people chronically underestimate is misclassifying workers, calling employees contractors to avoid payroll taxes, is one of the fastest ways to invite a full-scale employment tax audit. The IRS has a 20-part test for this, and I pay them by invoice is not a defense. Underpaying estimated quarterly taxes is the silent penalty machine that grinds business owners down without ever triggering a full audit. You just bleed out slowly through penalties and interest that compound every single quarter. Most people don't realize the threshold is not zero. You need to pay at least 90% of what you owe or 100% of last year's tax, whichever is smaller. The philosophical truth here is that the tax code rewards the disciplined and punishes the disorganized, not necessarily the dishonest, just the sloppy. You don't have to be cheating to get burned. You just have to be someone who never built a system. So the move isn't to be fearless about deductions or paranoid about them. It's to be methodical, consistent, and boring in the best possible way. The business owners who never get audited aren't lucky. They're just tediously well documented. At the end of the day, this isn't about outsmarting the IRS. It's about building a business that can defend every single number on its return without breaking a sweat. Discipline, process, and clean books aren't just good tax strategy. They're the foundation of a business that actually lasts. Whether you're structuring a business for real estate investing, managing contractor relationships, or just trying to find the right lender to grow, check out the links in our description below and let us help you get started the right way.